Thank you, Andrew. Recording is in progress. You don't want to be recorded, don't be here. Hello, Kevin. Again, that was just last night. Oh, that's right. We did trade you last night. I knew it felt weird. I'm not used to doing back-to-backs like this. It doesn't happen very often, but we're gonna have some fun today, though. So, yeah, what, 12 hours? 14, 16, something like that. Less than 24. So, anyway, well, welcome out to Trading Coaches Playbook. I do have to cut it short a little bit today by at least by about 5 minutes or so. Um, So I know Andrew's celebrating, going, "Yeah, he's going to finish on time." My parents are up from Oregon, so um, anytime they come up, especially as they're getting older, I take as much time as I can to spend with them. So um, my dad wanted to go play poker, but that starts at 10, so I won't make it. We'll finish this up about 10. It's about a 20-minute drive, so can't make that. Um, yeah, for now, right, Roman? Roman says, "Yeah, he did too late. Did some good for the markets this morning." Will it keep up is the ultimate question, I think. And I mean, it looks like it will. It looks like it wants to, at least. It's not. I mean, it's been running for what, an hour and a half or so now, and not really slowed down a lot. It was interesting that J.P. Morgan sold off. Actually, it popped like everything else did, and then it sold off for 15 minutes, 5 points, as he was talking. And I'm like, with lots of volume. Like, why is J.P. Morgan get sold off? I mean, the biggest bank in the world and is reacting negatively. Of course, now it's reversed and it's back up at an intraday high. So and pushing higher. So it's interesting to see how the ultimate reaction will be. Will this excitement and energy keep going for the day, or will the bulls be like, yeah, you know what? Maybe this is not such. Maybe rate cuts aren't such a good thing because realistically, rate cuts indicate that the economy is getting weak. So it's kind of that mixed bag. It's like, how's the market going to react if he comes out and says rate cuts? Are they going to get all excited because that's what they've been expecting and wanting for 2 years? Or is the market going to look at it and go, wait a minute, if they're going to cut rates, then maybe things aren't as good as we thought they were. So, but obviously, I mean, the bulls are excited right now. But some, like Microsoft, has started to roll over. I mean, it's been dropping for the last half hour, 40 minutes. It hit about, well, not quite 511. It's down to 507. So it's only 4 points. But the energy and excitement that was pushing it north is starting to cool off a little bit. So, oh, is it the purple tie? Is it? That's a giveaway? I hadn't heard that one yet. I guess maybe um, it's a sign to the downside. Well, if that's the case, I need to get some purple ties. I just don't like wearing ties. So I don't wear them. Anyway, let's get rolling. I'm not a registered broker dealer investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If you do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading. Morning, Brenda. So, sorry. I'm on my last cup of coffee, so it's almost gone. But here's what's coming up in the next little bit. You got Inner Circle the 25th and September 1st, 7 p.m. Mastermind Group, the 26th and September 2nd at 8. Monster Market Movers, the 27th, 8 p.m. E-mini Think Tank with Brandon, September 4th. Trade Use, September 12th. And then the free workshops are Monday at noon, Power Hour, and then this one, Trading Coaches Playbook, every Friday at noon. And then Power Option plays Monday and Thursday. Cover Call Explore Thursdays with Trip, and then E-mini Think Tank with Brandon are Monday, Wednesday, and Thursday. So too much coffee? What does that mean? It's like too much whiskey. Well, that, yeah. I've done that before. Not for a long time, but am I talking fast? You should be used to that by now. I always talk fast. Is it faster than normal? Yeah, if I get excited, I don't, then I'm not focused on it because I have to. Okay. Thanks for letting me know. I have to I have to really focus because I mean, I'm always speaking fast. And sometimes it's so fast that I mean, my mouth's trying to keep up with the brain. And sometimes I mumble. So don't ever be afraid to mention it because I'm well aware of it. I've been aware of it for years, and it's something I have to, like I said, I have to focus on it, and then I slow down a little bit. So squirrels, yeah, I know. I'm a mess. I know. I get it. It's what it is. So anyway, if we haven't met, I think I recognize most people here, but maybe not. Patterns of Flash, weekly list, or small account big returns are the three tools that I've created over the years. So, and well, small accounts, big returns is a 2 hour class. And that's gosh, that's been a couple years now, maybe 3 years since I did that, but it's all recorded, so you can buy it and go watch it. The Weekly Whispers is my weekly research, which I just finished recording a little bit ago. I'm a little behind with my parents in town. It makes it harder, so got to squeeze it in when I can. But then Patterns of Flash. If you haven't experienced that, I would suggest you do. In fact, we're kind of going to touch on what that is today, because talk about patterns and reversals. And before the move that we had so far today, things were shaping up to, we're starting to get some signs of reversal in the overall bigger trend. Not significant signs, not anything that I'm like, okay, I'm going to go in hardcore bearish right now. But I mean, there's certain stocks I'm bearish on, some stocks I'm bullish on, and it's a stock picker's market right now. It's very sporadic. Certain companies are doing really well, certain sectors are doing really well, others are doing terrible. Retail, especially food, is starting to get hammered. Retail stocks have been getting beat down. Walmart just came out and missed, so they got beat down, which is a sign that the economy is getting weak. It's been doing that for a while. It's just been a slow grind, weakening. And I think the big piece that could make things significantly worse is if real estate continues to deteriorate or if it accelerates. Because real estate has not only slowed down, in I think it's in 35 or 37 of the 50 states, year over year valuations on prices are down. It's I think 3 to 6%, something like that. So it's not a massive move. It's not like a giant move, but I think nationally it's 3% if I remember hearing right. So real estate has cooled off quite a bit, which makes sense. It's kind of surprising it has taken this long to cool off because the affordability thing, at least around where I'm at, I mean, you get a starter house is $500,000 to $600,000. That's just a basic either a house on a tiny lot, which is decent sized, or if you go out in the country, you can get a decent plot of land and an older, smaller house for 500,000. But I mean, 500,000 is pretty much the baseline. If you want anything a little bit more than that, you're going six, seven, $800,000, and you put 100, 200,000 bucks down. You put $100,000 on a $500,000 house, $400,000 mortgage. Your payment's still $4,000, and then the average car payment is now 800, 900 bucks. So I mean, if you're just a regular family, you have mom and dad and two kids, and you got two car payments and a mortgage. You're dropping 7, 8, 9,000 bucks just for that, not including other expenses, your insurance, gas, food, travel, other vacation. So at least where I'm at, if you're making 150 to 200,000, you're lower middle class. As crazy as that sounds, but I mean, you make 100, 120, you're almost poverty level. At least where I'm at, Seattle area, it's these 30-year-olds that are techies that just get out of college, go to work for Amazon, making 120, 150 grand. They're scraping by. Because in Seattle, the average rent of a mediocre little apartment is 3,500, I think, of a 600 square foot. It's crazy. So yeah, I figured you'd say that, Roman. Yeah, I mean, it needs to, and honestly, one of two things has to happen: either the valuations have to come down, the pricing has to come down, or interest rates have to come down. And I think that's part of the reason for the big excitement today is that because we are at like 30, I think it's 30 or 40-year lows as far as activity in the real estate market, as far as transactional volume. It's at multi-decade lows. So there's not a whole lot going on in the real estate market. Um, but even with a small drop, the valuations are still too high. In fact, I think it would be good. It would be really, really good for the overall economy and the real estate market, that whole sector, if it did drop 10 or 20%. I'd almost rather see that happen quickly. I'd like to see the real estate market crash quickly because I think, and it's a long time coming. It's been overheated for a long time, and the market itself is bubbly. Even guys that aren't market analysts, I mean, I don't, love him or hate him, Ben Shapiro, he's been talking about it for the last 3 or 4 months now about how the SPX, the PE ratio on the SPX is too high. And he's right. It is. That's why Buffett in the last year or two has been unloading a lot of his positions because it's crazy, right? The valuations are too high. So the odds of a pullback are higher than normal just because of where we're at. So that's why I'm not, even though, we're obviously breaking out, we're not at all-time highs. The Russell is still 7, 8, 10% below its all-time high, which is a better gauge of the overall economy because it's not only 2,000 stocks, but they're the small caps, which represent what, 85, 90% of the US economy are the small businesses. So the Russell's a good gauge for what the overall economy is doing. That's why I pay close attention to it and where it's at. And it still hasn't broken all-time highs. The SPX, the Dow, the NASDAQ, those all have the big boys in it. And something like, I can't remember what I heard it the other day. It was an interesting stat that the top 10 companies in the SPX have accounted for something like 20 or 30% of the move that we've had in the last 5, 6 months, or 40%. It was an enormous number. So you have this tiny swath of companies that represent a huge percentage of the move that we've seen in the markets. You still have a ton of companies out there that are not doing that well. And some of them, like Walmart and a lot of the restaurants, a lot of the retailers, they're starting to get beat up because people have cut back so much. So the uh, the hangover from COVID cash and cheap money is still here. And the question is, when does that hangover end? So, but part of the reason for this today is because I'm starting to see signs, patterns a little bit. They're not significant, like I said before, that the market's getting tired. So, what is a reversal pattern? I mean, obviously, this is for most of you, this is going to be fairly basic. But the real thing is getting ahead of the trends, not trying to predict the reversals, but be able to recognize the reversals as they're forming, as they're taking place, so that when it does reverse, you're not caught with your pants down, because that's what happens to most people. With a chart formation, it's a signal, right, to the potential end of a current move. Sometimes they're big, sometimes they're not. But when you understand the patterns, then you can not only avoid the big drop, but you can actually take advantage of it, right? You get out of the way, like Buffett's done, right? Buffett is expecting this market to peak out. He doesn't think it's going to keep going based on valuations. Now, he's a fundamentalist, right? And it'll probably take him a while. He just picked up a bunch of UNH. That's part of the reason the Dow went crazy in the last week and a half, is because he bought 5 million shares or something like that, $1.5 billion or $2 billion worth of United Health, which they already had a position in it, but it went from 600 to 300 in 2 or 3 months. So he's looking at it going, well, there's a stock that has a good valuation now because it's dropped so much, which obviously he doesn't expect the criminal problems, the issues that they have, the legal issues they have to affect him enough to not take the risk. So he must know something. But getting into the psychology of the reversal is when you start to see the reversal patterns forming, it gives a good indication of the battle between the bulls and the bears. And when you can start to see um, the difference, when you learn to read the charts in a way that you can see the sentiment in the candles and the price action and what's going on and the volume, that is where you can start to see where it becomes more clear, right? And a lot of it's just experience. I'd love to say that there's some quick fix or some thing you can just go, okay, here's, but you have to learn to recognize and see it. And I can see it now pretty regularly. I mean, even on a 5-minute chart, you start to see the action, the intraday action, and you can get a pretty decent feel of it, of what's going to happen. I mean, the more you trade, the more you see it, the easier it gets. Excuse me. And you can start to see these options, just like, you're watching a sports game, right? You can see a lot of times when one team's starting to get tired and they get sloppy, that's an indication that, okay, maybe they have a big lead and they lose the lead. I mean, the Mariners are famous for that. I've been watching more of them lately. They'll get a good lead going and then they choke in the 6th or 7th inning. So I don't know if they just don't have the stamina, if they just get tired. But once you see it a few times, you can start to recognize that, okay, these guys are getting tired. Now we're in the 7th inning, they're ahead by 3 runs, but they're probably going to lose their lead because you can see they're getting tired. Same thing in the charts. You can see when the bulls start to get tired by looking at the candles, the shadows, the volume, those types of things. So double tops one where you start to see had a lot of double tops show up this last week. So that is, and we'll go look at the chart here in a little bit. But head and shoulders is, as most of you probably know, my favorite. But notice I put there the key pattern to know. I didn't say key patterns. It's not plural, it's singular. Because once you understand the head and shoulders pattern, the rest of them are a piece of cake. If you understand the head and shoulders pattern and just the basics of what it indicates, then it makes the other ones very easy. The other reversal patterns. And actually it makes pretty much every other pattern. That's why in patterns and flash, that's what I started with, was the head and shoulders pattern. And some people freak out. You talk about 30 or 35 patterns. Well, the reversal patterns, I think there's 8 or 10. But you understand the head and shoulders, the rest of them are a piece of cake. So learn this one extremely well if you're not familiar with it. I'll show you some today and we'll talk a little bit about it just as far as that goes. But learn this one pattern really, really well and understand it. The psychological side behind it, the emotional, the reasons that it's doing what it's doing. And the rest of them will be a piece of cake. Most traders investigate blindsided when the shift happens, right? And you only notice it after it's too late. And that is the purpose and the goal to learning to recognize the reversal patterns, is because then you don't get blindsided. Not only do you see it coming, so you can prepare for it, either by getting out of the way or by getting on the bear side and riding that train, depending on where you're at, what you want to do. Some of you only trade bullish, which is cool. That's Buffett, right? He's only a long trader. I don't think he shorts anything. He might. I would imagine he buys puts as insurance. I mean, most of his biggest businesses are insurance businesses, and he's well aware of what puts are. He trades. I mean, years ago, we went back and looked at the 10Q. He trades something like back then, there was $2 or $3 billion worth of options transactions. From what we could figure out, I don't remember if it was blatantly clear, but gosh, this is back in 2005, 2007, something like that. It might have been 2009, actually. It looked like he was selling puts to acquire stocks when things got beat down. So, and it sounds like, at least from the way it reads, I think he owns a ton of Coke, if I remember right. He's selling covered calls on those. So people say, he's not an options trader, which he is. He just uses them for, different purposes than we do. Most of us are, short-term swing trading or longer term, position trading options, where he's using them for a different purpose. So, um, confirmation bias, right? The goal is to stay neutral. From a mental and emotional perspective, is to read the chart, analyze it for what it is. Like the next bullet point, analyze all data realistically. Mainstream media is what MSM is. The mainstream media would have you believe the narrative that they want you to believe, right? They don't necessarily, their goal, you got to keep in mind that media's goal is to get your eyeballs to watch them and to keep your eyeballs on them. The vast majority of people trade bullish and they have a bullish bias. And so they cater to that belief, that bias that most people have, which is they want the market to go up. Some of us, not necessarily, some of us want to see the market tank, right? But so it's a good idea to get outside the mainstream media and get news, especially now that we have news from so many other sources, so many other places. In fact, that's why the mainstream media is getting beat down so bad, is because so many people have so many different news sources to go to now. I mean, you got YouTube, you got other streaming platforms, X. What else is there? I mean, even Spotify, a lot of these places, you can get all kinds of news from all kinds of places now. Mainstream media used to be the only place to go. So, in fact, there's a ton of people I follow on YouTube, especially in the real estate sector, because it's not something that I do myself, but it's good to keep a pulse on it. And a lot of them will give accurate information that you're not going to get from mainstream stuff. They're going to go deeper. They're going to go into it because there's no timeline. They don't have advertising breaks. They don't have all this constraints on them. They can just literally tell it like it is and show data and take the time to show the data and information that is more accurate. It's a bigger picture view, if you will. So there's a few people I found on there that are good. There's well, like Peter Schiff's one for a macro view. He's a big gold guy. He's a monster bear. He has been for a long time. But he's called many of the big reversals. A lot of times too early, but he's got great information. And I think the key is not necessarily to take what they say as gospel, but to absorb as much information as you can and then input that into your trading style and the way you do things and utilize it in the way that you need to. In other words, don't just follow somebody blindly. I tell people that all the time. Don't just listen to what I say. Don't just take my trades or whatever and just do it. You need to apply your own trading style, your own mentality, how much capital you're working with. All that stuff is very personalized. That's why we can't give personalized advice, right? But don't follow anybody blindly. But you got to take in information. Then you have to apply it and make it yours, if you will. So Peter Schiff, Schiff, I think it is. Uh, yeah, he's been around for a long time. So, and he's made a lot of significant calls on the market, but uh, and that's the thing. And part of the reason I bring him, you got to recognize, and that's why the bias is, he is a big gold guy because he has a gold fund. He has a mutual fund company. So he's doing these videos not only to put information out, but also because he's promoting his own product, right? He has a gold fund. He sells gold. He's got a gold company. He used to have a bank, which that's a whole fiasco in of itself. There's some news on it last week that was interesting, but um, so you got to keep in mind, even though I watch him and I like most of the stuff that he shows, he's also promoting his own products, his own services, his money management fund. He's got some the gold's the big thing he pushes. And that's part of the reason he's bearish. But like I said, he's made good calls. So take what he says with a grain of salt and understand that everybody everywhere has some kind of motivation usually. There's some underlying motivation. Like why are they saying this? So I'm always skeptical and questioning what is the purpose for them doing this? Yeah, hidden agenda. And is it hidden though? Well, and that's one of the reasons I like Peter Schiff. He doesn't hide it. He's straight up about it. He flat out says, you know, I'm here to promote my hedge fund or whatever or gold. So yeah, exactly, Steve. Trust YouTube is more than the media. So do I. That's why I listen to that more than I do the media. I'll have YouTube running instead of CNBC. They're biased. They hide everything, and they've got time constraints, right? So, and I mean, all of their motivations. Yeah, exactly, Tom. Their motivation is usually money. I mean, that's what motivates all of us, right? To one degree or another. And even the YouTubers, I mean, they're motivated by money too, because if they get a big enough following, they can monetize that. Um, and a lot of them are making a ton of cash. I mean, a lot. I had no idea until several years ago. The guy, what's his name? Mr. Beast. He made something like $250 million last year. I think that's what the number was. It's insane, like $20 million a month. But he's got 150 million followers. So if you got that many eyeballs and you can advertise, you can create a tremendous amount of revenue off that. So yeah, people are making. I think the last I heard the number was you had to get about 100,000 followers, and you monetize it where you can make a solid living. But I mean, there's one guy that I don't know 5 or 6 years ago, all he does is play video games. He plays Minecraft, and he just talks as he's playing. He just and he had something like 50 million followers. He's making 25 million a year or something. It's like what? So kids, when I was a kid, we played video games. Today, kids watch others play video games. It's like, what? Why did you play the game yourself? But they're also learning, they're watching these so that they can learn how to play it better when they are playing it, or they play right alongside while they're watching it. So it's crazy. So Tim Pool, yeah, I've seen him a few times. Um, and I met a gentleman. Where was it? He's the guy around here. Um, that was a few years ago. I can't remember where I met him. He's like the Mr. Rogers of our day. I didn't even know who he was. Blippy. That's it. It's Blippy. If you have kids or grandkids, you probably know who Blippy is. If they're like 2 to 6 or 2 to 8 years old. But I happened to meet him somewhere. And we were just chatting, and he said, "Yeah, you have any kids?" I'm like, "Yeah, they're 12. They're 12 and 16 or something." He goes, "Yeah, yeah, you don't know who I am." I'm like, "Okay." He goes, "My demographic's like 2 to 6 year olds." And I found out he was Blippy. I looked him up, and he's had well over 1 billion views. Guy's made like 50, 60, $70 million. That was a few years ago. He's probably at 100 now. So yeah, Brenda, YouTube pays. They pay something like, I think it's about a half a penny, or it's between a half a penny and a penny per click, or per like, or something like that, or per view, per view. So if they get 100,000 views on a video, if you're getting a penny per view, then 100,000, that's 1%. What is that? 10,000? No, that's 1,000 bucks. Is that right? I don't know. I can't. My math brain is broken. One penny is 1% of 100,000 is $1,000. You get a million views, that's 10 grand. Is that right? 10% of a million is 100,000. So yeah, 1% is 10,000. But some of these guys get, 7 million, 10 million, 15 million views on a video. You get 15 million views on a video, that's 150 grand. So yeah, it's a big business. That's why these kids these days don't want to be sports heroes anymore. They don't want to go out and play football. They want to be a YouTuber. I've heard that in the last few years. That's the new dream for the kids is not to be a sports star, but to be famous on YouTube. It's crazy. It's crazy. But it's big business. So that was only one squirrel, Brenda. Only one. And I'm allowed one squirrel every 5 minutes. That's the rule. 10 minutes? Okay. That's fair enough. We'll negotiate that. I think the biggest thing is to here, and I've talked about this before about vision. And I mean, essentially, that's what we're doing as traders, right? We are analyzing what is in front of us, the chart and the past history of the chart. And based on that information, we're saying, this is what I think may be coming next. I've used this example um, numerous times where you look at Steve Jobs and everybody, oh, he's a visionary. But it's not really that difficult today. I mean, not difficult to do because all he had to do was look back and say, okay, well, we had records. You had this type of technology, and then you had records, and then you went to 8-track tapes, and then you went to cassette tapes, and then to CDs. Well, what's the next progression? Looking at tech, I mean, obviously he's a tech guy, so he's in that world, but he's looking at all the technology, going, okay, we got these chips, and these chips can hold a lot of data, a lot of information. And based on the progression of what we've seen in the past, here's where I think the next step is. And all he did was get in front of that. And he said, okay, here's the next step is this. And then the iPod comes out. Ah, everybody freaks out. And then the iPhone. And I mean, that's what built Apple. It really isn't complicated. It really is very simple. You just have to look at the past history and say, based on this information, what might be next and get in front of it. And that's all we're doing as traders. We're looking at the chart, looking at data, look at what information you need to for your trading style and saying, okay, based on this, what's the next step? What's the next place we're going? Okay, see you, Roman. Good to see you. The hard part is that you can build out that vision. You can look at things and say, okay, based on this is what I'm expecting. But it's easy to get stuck in that bias and say, okay, here's what I'm expecting. And if things change, if you don't change with the change, with the modification of, okay, here's what I was expecting, but now things have shifted. Now I have to change with it. Hence the point of today, recognizing the reversal patterns. Bullish people have been bullish. 5, 6 months, we've had a bullish rally. But what happens when they start to shift? What happens if the pattern starts to show up that says, okay, this rally is getting weak? Your vision for a continued bullish move has to change with the patterns. So, hope that makes sense. Shall we look at some charts now? Any questions on any of that? See if I didn't miss anything. Oh, I just saw Roman's gone, but oh no, he's still here. See, he said earlier, I thought I missed something. Low price on houses is a good thing, but good thing will not go and happen. Yeah, good things don't happen without bad things. Sometimes they do, but usually one has to go first. It's a yin yang type of thing, I guess, if you will. So BTC, are you talking about Bitcoin? I'm not I'm not a huge fan of Bitcoin. Um, I mean, as a trading vehicle, I can see that possibly. Um, but to hear people call it an asset, I think is nuts myself. But that's just me. Um, Mainly because what does it do? I look at things from a real world perspective. Like if it doesn't fit into I mean, there's three basic needs in life, right? Food, clothing, shelter. If something doesn't fit into one of those three categories and it can't provide those one of those three things, then it really doesn't have any real world use. And Bitcoin does none of that. I mean, if first of all, God forbid there's some kind of crazy event and all the power is lost, if you're using your money, your Bitcoin to buy things, if there's no power, if the entire power grid goes down, you can't buy anything. You have nothing, right? It's digital gold. Really? Can you use it to conduct electricity in something? Anything? Can you make jewelry with it? No, you can't. So land, I mean, food, clothing, shelter, right? You can build shelter, you can grow food. It's just, I don't see it. So I wish it would have bought it. 10 coins at 300 bucks in 2012 when I looked at it first. Yeah, of course I wish I would have. But hindsight's always 2020, right? You look at it now, it's like, well, there's, a million two, 1 million one that I could be sitting on right now. But woulda, shoulda, coulda. I didn't believe in it then, and I don't believe in it today. And I mean, maybe I'll be wrong. But again, I mean, historically, it's things like that usually fizzle out. Just like the tulip bulb craze back in the 13th century or 15th century. I think that's what I compare it to. But who knows? We'll see. We'll see how it goes. So, really? How are you on then? Trip said I lost powers this morning. Still don't have internet. A few hours felt like days. Oh yeah, hotspot. Okay, that makes sense. Yeah, it's nice to have phones backups. That's funny. I was just talking about that yesterday. Having a backup because if the internet goes down, and that's nice about having the phone is you can jump on that with a cell signal unless the cell tower's down. So, but all right, Brenda, I'll entertain you and I'll look at. Okay, this is BTC. Is this like an ETF of Bitcoin? I'm assuming it probably is. Okay, that's what I thought. Well, and everybody thought the ETFs coming out were going to be just going to create this huge catapult catalyst to Bitcoin, and it really didn't do much. It just kept going sideways. Which actually, I think this could be one of the reasons that Bitcoin eventually starts to sell off. Because if you have an ETF and it starts to sell off, guess what happens? Bitcoin's going to sell off too. So I don't know. I get the craze. I understand it from a psychology perspective. It's my own personal belief is that it's eventually going to die, I think. But well, and here's just what well, and here's another reason I love patterns, right? Here's a beautiful, actually symmetrical triangle. So good example, Brenda. Even though I just railed on Bitcoin, but it's still a great example for patterns. And that's the thing. I mean, that's why as a trading vehicle, I can see doing that. And I mean, that's about as textbook as it gets. And it actually went further than expected. But nice little symmetrical triangle, right? It's just consolidating, got a big old rally before it. It's consolidating, it's catching a breath. Right. I compare this. I know it's a cheesy example, but I used it a lot because at least in my twisted mind, it works. If this is me sprinting up a hill, I'm going to need to take a break, right? This is a steep hill and I have to catch my breath. This is this is the stock catching its breath. Okay, I just ran really fast and I'm tired. I need to breathe. Once I catch my breath and I've rested some, then I can keep running. I can go up the next hill. And it busts out and does a perfect little roll reversal and it takes off and rallies. So that's a good example of exactly why I love patterns. Because when you find something like this, it can be gold. Real gold, though, not Bitcoin gold. uh, but as far as current, I mean, we don't have a whole lot of data here, obviously. Um, if it rolls over from here, then we have the beginnings of, do y'all see it? The one back in the middle that I just drew out, Tom? Symmetrical triangle. There you go, Brenda. Ding, ding, ding. Yeah, so depending on where it goes from here, I mean, we've got just the starting point of a head and shoulders right now. It's not real pretty. I don't like at least the slope is not bad. I don't like a neckline that slopes up or down a lot. This is not bad. If it's going to slope, I prefer to slope up a little bit, but that's not too steep. If it's really steep, I don't even treat it as a head and shoulder, especially if it's steep to the downside. If it's really steep to the upside, it's better, but if it rolls over from here, then we'd have a right shoulder. Well, any between here and about 54, I mean, that high, as long as it doesn't break this high, if it rolls up to here to 53, 54, and then rolls over, then we have a head and shoulders. Ugly left shoulder. And there's another one, pattern, actually. And this is why, obviously, using stops is important. You've got a pennant type of pattern there, right? So you've got this little flagpole, a quick move to the upside, this really steep, almost straight up, and then a little consolidation. Again, sprint up a hill. I got to catch my breath. So it consolidates for a little bit. Traditionally, it would break to the upside, but obviously this time it didn't. It broke down. So actually, I wouldn't even be in this because I would play the breakout if it breaks above, and it didn't this time. So I wouldn't even be in the trade. But again, seeing the pattern that's where you find opportunities is when you can see the pattern. And the goal is, and this is why patterns and flash exists. It's why I created it, is because I used to see stuff like this when I first started back in 2000. I started reading books and John Murphy's book, and it was like, woo, patterns are awesome. And I'd start finding them just like this. Be like, look at that beautiful symmetrical triangle. Textbook, literally textbook, where it breaks out and then pulls back, does a roll reversal, and then bolts and moves beyond the expectation. But what are you going to do with that right now? The answer is nothing. You can't do it. The move's already made. The opportunity is gone. It's like inventing the iPod after Steve Jobs did it. Like nobody cares. All the knockoffs came out after the iPod did, but the iPod was there first, therefore it made all the money. I'm sure they made some profits on the others, but some other ones did. But uh, you've got to see it. The key is to see it on the right side of the chart. And that was the whole concept in my mind because I was tired of finding patterns like this and missing not seeing it over here where I can still take advantage of that opportunity. I mean, wouldn't you rather have wouldn't you rather have seen it right there? Which is the goal, right? You got to see it here so you can take advantage of it because then you can say, okay, here's a pattern. You draw the lines on it again, symmetrical triangle. If it breaks north, I'm going to get long. And boom, it does. And there you go. And there's your profit. 48 to 52 runs 4 points, about 7-8%, which would likely get you anywhere from 50 to 100% rate of return on an option trade. So, yeah, depending on how it plays out from here, if it develops another right shoulder, then you have a head and shoulders. So spiders are just going to be the overall market, which we're pushing the highs. Do we stall out here and form a double top? Could. That's what's starting to. That's what could take shape, I should say. It's not even starting yet unless it rolls over. But again, getting back to that idea of building out a vision, looking at the chart and seeing what we see and looking at the history and saying, okay, what could take place next? What could be coming? And at this point, if we break above these highs, obviously there's no double top. If we fail to break those highs and it starts to roll over here, then we have a double top. So it's good. I just plant those seeds in my head and like, okay, here's what could be coming next and be prepared for it. Because it's easy to get, you're looking at stuff and you go, and if you're not thinking about what could take place, what could happen, if this happens, this is what's going to take place. This is what will form. Then you don't catch it and you see it too late, right? I mean, that's happened to me many times. And it's going to happen anyway, no matter what. You're going to miss stuff all the time. I mean, CRM. I was frustrated. It was a beautiful descending triangle. And for whatever reason, I didn't pull the trigger on it. And here it is, 5, 6 days, it runs 24 points, 10%. It's probably at least 50, if not a double on it. But I mean, that's the reality of trading. You're going to have that happen where you find opportunities and you don't get on it, and you get in something else instead for whatever reason, and you miss this one, and it's just like stepping into the batter's box, right? And you watch the home run pitch go by, and then the next pitch comes, and it's a slider, and you swing at it, it's low and away, and you swing at it. So you swing at the crappy pitch, and then you let the home run pitch go by you, right? Happens in baseball, it happens in trading. It happens to the best of them. So, and I'm not going to stop using baseball, Brenda, because almost everybody understands it, and it's a perfect analogy, at least the hitting part. So it's you're gonna swing at bad pitches, and you're gonna watch good pitches go by, and maybe it's just me trying to reconcile my childhood, and I wasn't a very good hitter, so I was mediocre at best. I was a pretty good defender, pretty good outfielder. I was a good catcher when I was really young, and then others started to get better than I did. But I wasn't that good. I was fairly athletic, but I didn't put a lot of effort into it. So Q's, same thing. A little morning star going on this morning. Not anything spectacular, but that could if it if it stays up here and it continues to stay about where it is and closes around this level, then we have a nice little candlestick, a short-term candlestick, giving us the potential of it rallying for a few more days. But not seeing any, well, yeah, no, I wouldn't consider that head and shoulders or the beginning of it if it rolls over from there. I did it as a Russell. And so come on, there we go. Ooh, you see what I see? Well, if we take today out, see, and again, there's a double top. It's not, the right side is a little higher than the left. Traditionally, it's exactly the same spot, but I would still play it possibly, depending on what it looks like and what the action's like. But break it at the midpoint when it breaks the midpoint. In this case, it played out beautifully. And when it breaks that midpoint, that's where we're expecting it to drop, and it actually dropped about what we would look for it to. Here's a little one. There's a little double top. Here's the formation of a double top that didn't play out right. It didn't come down. It didn't break the midpoint, so you wouldn't even be in that trade. But you also have a symmetrical or an ascending triangle right there too. Again, not trying to necessarily go back and redo history, but at the same time, that gives us a breakout to the upside, which I don't know if that's really playable or not. And a lot of it depends on why. I mean, what was the gap up for there? That was November. Oh, that was election time. Yeah, that's when Trump got elected. The market liked it, obviously. That's the gap on Trump winning the election. So, but you can see, I mean, it's a 1 day move to the upside, and then we had a couple more days of excitement, and then it sold off pretty heavy. Found support right there at the previous resistance. Beautiful roll reversal. That's another thing. If you haven't had patterns of flash, you don't know roll reversal. Get patterns of flash because that's where you'll learn this. Old support becomes new resistance, and then we rallied back up, and then boom, it sold off, and I don't know what's that. That's just before Christmas time, but again, I mean, there's really no way to catch this. Sometimes it's hard when you look at line charts. You go look at that move. Well, it was a gap, and unless you're gambling on, somebody getting elected and the market liking it, I didn't expect a move like this, whether he won or not. I mean, I would have expected a move like that. So that's just straight up gambling to take a shot at that. But so you really wouldn't have been able to take advantage of that. But as far as what's going on now, and this is another reason that I am still mildly bearish, but we haven't, from an economy standpoint, I'm bearish. The market itself obviously is still bullish, but those two can diverge for quite a while. And the market can, I mean, what's the market can stay bullish longer than you can stay liquid. Uh, and that was proven in the late 90s I mean, Buffett sold out of everything in what, 97 or 98? It was another 2 or 3 years. The market just kept on, the tech stocks kept running. And now all these people are calling him a moron, an idiot. You're an idiot. You're missing the greatest move in history. And guess who end up shining like a nice, freshly polished piece of gold? Buffett did. When the market crashed, he killed it. Everybody else got wiped out. He didn't. It's a good argument for sticking to your plan, figuring out what works for you and sticking to your trading style. Buffett's very disciplined. He does what he knows. And he doesn't get out. He didn't know technology. He said, I don't understand technology. I don't get it. I'm not going to buy into a company that I don't understand. He only buys companies that he understands. And he buys companies that are cash flow. That's why he has Coke and railroads and old school types of companies. So, but there is a broadening pattern on the Russell, which that's being negated today. But that is a reversal pattern. It's extremely difficult, almost impossible to trade based on the trend lines. But it's an indication of increased volatility. And increased volatility, especially if the market is top heavy, is generally speaking an indication that a top might be near. So a lot of it will depend on how today finishes. And it doesn't look like it's slowing down. It's still up 86 points. So, and it doesn't look like the market wants to sell off, but from here, but we still have what, 3 hours to go, a little more than 3 hours. A lot could change. So we'll see. Do we get all yours, Brenda? Yeah, don't try to catch a falling knife. Okay, good. I'm just going to flip through. These are the ones I usually do my research on Thursday nights, and I record the weekly whispers either Thursday night or Friday morning. And so these are a lot that I found, but lots of double tops, lots of, no, not lots of head and shoulders, but not really good, clean ones. But there's basically inverted head and shoulders, kind of. Also an ascending triangle. And that's the interesting thing about patterns. You can have more than one pattern. You get developing and forming at one time. A lot of times you'll get a head and shoulders, but it also could be a symmetrical triangle at the same time. And hence the reason that we wait for it to break. Because if it breaks out of the triangle to the upside, then the head and shoulders is negated and it's still bullish. But if it breaks the neckline, so in fact, what was that? It was a gold stock. What was it? That was just doing that. I was looking at it as a head and shoulders for a couple of weeks, and then um, that got negated, and then turned out to be a symmetrical, and it just broke out. I don't think it's Barrick. That's one that's gone crazy. A lot of these small gold stocks have started to take off. But here's one that there's a nice ascending triangle. Broke out of that 22, and if it breaks north of that 26, it could possibly run all the way to 40. It did it back in 07 when gold took off from, I don't remember what it was, but price wise, I think it was 300. It went to 1800 over a couple of years, whatever it was. So a lot of the gold stocks have been rallying like mad. So the only question I have is it too late? When something runs this hard and this fast, the odds of a pullback get higher and higher. So I'd rather wait for this thing to either slow down and kind of dance around here and then catch the breakout if it breaks out north, or wait for it to pull back a decent amount. So I'm not excited about jumping on this thing, especially on day three, even though we've got lots of volume. You can see the average, even the average of the volume is increasing. So people are starting to pile into these based on the fact that gold has stayed up in this 34, 3,500 range. And it looks like it wants to break out as well. In fact, since we're on that theme, I'll grab that. What happened at 9 o'clock that made the market shoot up? Jay Powell came out and told the market what they wanted to hear, that rate cuts are coming. So, that's the debate, and that's the hard part about trying to play news like this, is how's the market going to react? Because on one hand, rate cuts, the market's been begging for them for a year or two, wanting them, and now they got what they want. But rate cuts are usually also an indication that the economy's not strong. So it's like, it seems a little schizophrenic to me. It's like, yeah, we're going to cut rates because the economy is getting weak. A weakening economy is not usually a good thing for the stock market. So, which goes to the point that people react emotionally to things. They react to what they want to hear. The bulls are all excited about rate cuts and they want rate cuts. And so they heard it and they got all excited and jumped in. And I'm sure anybody that's bearish like me, I mean, long term, at least in the, well, I shouldn't say long term, over the next 6 months to a year, I think there's a high likelihood that something's going to happen. Real estate, I don't know if we're going to have a black swan event, but something, um, well, that's what's hard. I mean, we might just have a stagnating economy, stagflation, as they call it, right? Um, it's always hard to say. We just never know. But because of the underlying weakness that I see in the economy, I'm not that bullish on the stock market. I think that eventually reality is going to settle in and things are going to drop off some, which I think needs to happen. And that was a data point I heard the other day is that I can't remember what the number was, 71,000. I don't remember what it was. The number of companies that filed for bankruptcy in July was either at a record level or it was on par with the 2020 bankruptcy filings. So when COVID hit and all these companies went under because they couldn't pay their bills and they didn't get a PPP loan or whatever happened, they had to file bankruptcy. You had a massive spike in bankruptcies because of COVID. Well, last month we had either more than or an equivalent amount of bankruptcies. So that's why this big move in the market's like, okay, if in the real economy, because the stock market is not the real economy, it can be correlated, but sometimes they disconnect. Sometimes the stock market is still really bullish and still running, even though the underlying economy is weak. When I see data points like that we have a massive spike in bankruptcies, and they've been increasing for several months. And then you have either an all-time high or close to an all-time high as far as companies filing bankruptcy. That's a clue. And the stock market, in my opinion, is pretty disconnected from the underlying economy at this moment in time. So, and actually gold, it's a good segue. Gold is indicative of that because gold has rallied, what, 50, 70% in the last year, less than a year, and it's staying here. It's not selling off. And central banks are buying gold like mad. Why? Again, that's going back to the vision thing. That's taking the pieces of the puzzle and putting it together and say, okay, based on this information, here's what I see possibly coming. And recognizing that while the stock market can be correlated to the economy, like they're disconnecting sometimes. They did in late 90s, they did, right? .com. And I think this whole AI boom is very reminiscent of the .com boom. And there was reality, and then there was the euphoric. What was Greenspan's term? Irrational exuberance. So, I mean, we'll see. I mean, the market, like I said, the market can stay very bullish for a long time. Hence the reason we trade short term, right? Because you get in and you get out and you take your money and run and get out of the way. So if something happens, then you're not getting hammered. There's a good looking ascending triangle on this thing. The only thing I don't like about this is the gappiness of it. So if you're trading longer term and you don't mind the gaps, go for it. I just don't like stocks that gap like this, which it's based on how gold trades overnight. So it makes sense why it does it. I'm just not, I don't love it. So more I don't know. NEM I'm a little biased on. That's just chopping sideways. What is this? Isn't that Marathon Patent Group? Well, see, here's an account. I mean, this company's not been really, it had a big boost in 2020, COVID boost, but obviously this stock's not doing that well. This company's not doing that well. This economy is not great for this company, whatever they do. I mean, obviously they do patents, but I don't see any patterns at all even developing at this that would suggest it's time to get in or get out. It's just kind of chopping sideways months at a time. So yeah, nothing on that. NEM though is another gold stock, which I mean, seeing what those are doing. Um, and yeah, I'm a little biased on this one. I may or may not have a position that I've been in and out of multiple times. You buy a leap months ago and in and out multiple times, and things are good. But yeah, just like Barrick when we first started with that, this thing's running. It's a little bit, well, it's not hasn't accelerated like that. It did a couple times back here, but um, the gold stock's going to follow gold. So if gold for some reason starts to sell off, then obviously the gold stocks are going to go along with that to a degree. But how far does it have to go? Well, 76 is kind of the target. I think historically, well, yeah, I don't know. That's split adjusted for some reason. It's a little weird, but um, last time I made a move like this, I ran up to 75. It seems like it went to 80 or something like that at one point, though. I guess no. Well, wait. Yeah, intraday it did, or intra. Well, that's a monthly chart. So intra month it went up, hit 76. But you can see it's on a tear. So the question becomes if something's this bullish and how much further does it have to run? It looks like 76, but it very well could break out of that too and take off north from there. So that remains to be seen. Hence the tricky part of trading, right? Is taking the information we have and creating a vision and saying, okay, here's what I see possibly coming. But then from there, then you've got to create the plan. Then you've got to say, okay, here's where I'm getting in, here's where I'm getting out. I'm only willing to risk so much. So that's the tricky part. And then when you're in it, being able to manage your emotions well so that you don't freak out and panic out. So any other quick questions? We got to call it a day before we cut out. I'll wait for a minute or two, see if any questions come through. I'll buzz through these. There's Boeing, which is kind of the beginnings of a double top, but also in a symmetrical triangle. So again, it can be both patterns at once. So there's a little roll reversal coming in on BSX, kind of an ugly head and shoulders on that. Not excited about it, but there's a double top on Citigroup. At least they're formed. There's was a head and shoulders on CCJ, depending on where it closes. Not real pretty, a little steeper neckline that I like. CCL, that was kind of a double top, an ugly one. CNQ, there's a head and shoulders. That's fairly nice looking one, actually, depending on what it does today. If it closes below the neckline, if it keeps running like it is, then it's negated. But starting to double top on COF was until today. There's an EXE's nice looking head and shoulders, and that's actually playing out well right now. This cat's driving me crazy. Um, there was a head and shoulders, but it's at this point still in play. But GPK, there's an inverted head and shoulders. Well, there was a double top on Home Depot, but if it closes up where it's at now, then that's been negated. There was a little double top on Robinhood. It's still at this moment in play. As long as if it closed below that line, then it should be okay. Ionic, little descending triangle. There's kind of a pennant pattern there. It was a little bit of a double top until today. Now it looks more like a pennant. It's changing. I hate JD.com. We've been watching that. We had a little miniature head and shoulders forming on JP Morgan. Lilly looking for a little roll reversal there, about 715. If it stays below that old support, there may be maybe another leg down to 650, 6.25. Nike was forming a head and shoulders, but again, today's changing that. An ugly double top on Schwab. Viasat, there's a nice pennant looking pattern, which it's right now breaking out pretty good, but will that breakout hold? Possibly. And Williams, the last one on my list, there's ugly head and shoulders. We've been watching this for a little while. But again, the key is to recognize it on the right side of the chart and seeing it before it breaks so you can catch it. But then just like I miss CRM, I mean, you're still going to miss some. It's going to happen. But as long as you catch, 1 out of 5 or 1 out of 10 of them, then you're good. So, all right. Thanks for coming out, hanging out, having some fun. And we'll see you on the next one in just a few weeks. Y'all take care. Have a great weekend. God bless. Bye-bye.